Week 4. TQQQ is down 4.92%. VOO is down 0.44%. 1 week after TQQQ was finally ahead for the first time, it has given back all of that gain and more. TQQQ lost 11 times more than VOO this week. And this week I'm going to explain exactly why that is possible. Nothing in this channel is financial advice. This is an experiment, it's entertainment. Always do your own research before investing anything. Let me show you the numbers first. Portfolio A, the boring one, VOO, is 68.52 euros, and portfolio B, the amplified one with TQQQ, is 65.45 euros. The current leader is VOO, which leads by 3.70 euros, and both portfolios are back in negative territory. Now, some of you might look at that and think that is proof that TQQQ is a terrible investment, and some of you might think this is exactly the kind of volatility I expected. Both reactions are valid, but neither one tells you whether TQQQ will win or lose this experiment over the next 3 years. And that is the point. What I want to do today is explain exactly why TQQQ can lose 11 times more than VOO in a single week. Because if you understand that, you understand what this experiment is really testing. Let's take a look at the Fear and Greed Index this week. This week, the index sits at 44. That's about the same as last week. 3 weeks in a row now we have been in fear territory, stuck between 43 and 44. That actually tells an interesting story. The market is not panicking, but it's also not confident. Investors are stuck in a holding pattern, waiting for information. Specifically, they are waiting for earnings season to tell them whether the AI boom is still real. That uncertainty is why we're seeing these big swings in TQQQ, even though the overall market is relatively calm. Fear does not have to be extreme to create volatility, it just has to exist. And just like every week, I want to take a close look with you at the 3 most important market events from the past week. The first event is that big tech earnings season is now live. This week, investors are watching earnings reports from Alphabet, Tesla and Intel. These are the first major tests of whether the AI investment boom is actually producing real profits. Companies have been spending enormous amounts on AI infrastructure. Now investors want to see whether that spending is translating into revenue and earnings growth. The anticipation of these results created both optimism and uncertainty throughout the week. Event 2. Oil prices hit a 6-week high. Renewed tensions in the Middle East pushed oil prices to their highest level in 6 weeks. Higher oil prices create what economists call an inflationary headwind. When energy costs rise, businesses pay more to operate, prices go up for consumers, and the Federal Reserve finds it harder to cut interest rates. This is really bad for technology companies which dominate the Nasdaq. Growth stocks depend on the expectation of future profits. When interest rates stay high, those future profits are worth less today. Event 3. Chip stocks rebounded strongly. Despite the oil and rate concerns, semiconductor stocks had a strong week. Nvidia, Broadcom and AMD all rallied as investors remained convinced that long-term AI demand is not slowing down. This gave the Nasdaq a partial recovery, and TQQQ amplified that recovery too. Both the oil and earnings uncertainty weighed more heavily. The net result was a negative week for both portfolios. The past week, in one sentence, chips rallied, oil worried investors, and earnings uncertainty kept everyone on edge. So, TQQQ lost 11 times more than VOO this week. How is that possible? They are both in the same market, the same stocks, the same news cycle. The answer is leverage, and specifically 3 times daily leverage. It is the one thing that makes TQQQ fundamentally different from every other investment in this experiment. Let me start with the simplest possible definition. Leverage means using borrowed money to amplify your returns. If you invest 100 euros and get a 10% return, you make 10 euros. If you invest 100 euros of borrowed money on top of your own 100, you now have 200 euros invested. A 10% return on 200 euros is 20 euros. You doubled your return without changing the market outcome. But here is the other side of that coin. If the market drops 10%, you lose 20 euros instead of 10. Leverage amplifies everything, gains and losses equally. Now, TQQQ does not use leverage in the traditional sense of borrowing money. It uses financial instruments called total return swaps. A swap is an agreement between TQQQ and a financial institution. TQQQ agrees to pay the institution a fee. In return, the institution agrees to pay TQQQ 3 times the daily return of the Nasdaq 100. Every single day, reset to 0 the next morning. That daily reset is the key to understanding TQQQ. Say the Nasdaq drops 2% on Monday. VOO, which roughly tracks the S&P 500, drops about 1.8%. TQQQ drops roughly 6%, 3 times the Nasdaq move. Then on Tuesday, the Nasdaq recovers 1%. VOO goes up about 0.9%, back toward where it started. TQQQ goes up 3%. But here is what most people miss. TQQQ's 3% recovery is not on the original base, it is on the reduced base after Monday's 6% drop. So a 6% drop followed by a 3% gain does not get you back to where you started. For example, start with 100 euros. The Nasdaq minus 2% makes the TQQQ minus 6% on Monday, then the result is 94 euro. The following day, Nasdaq plus 1%, TQQQ plus 3% on Tuesday, that makes 96.82 euros. So the net result after 2 volatile days is minus 3, that's 3% down after a day that dropped and then partially recovered. This is why TQQQ can lose so much more than VOO even when the markets move by similar amounts. Now let me show you why the downside is always worse than the upside looks. If you lose 10% of 100 euros, you have 90 euros. To get back to the 100, you do not need a 10% gain, you need 11.1% gain. That's the math of losses. They are asymmetric. A 10% loss requires more than a 10% gain to recover. Now multiply that by 3. If TQQQ drops 30%, it needs a 43% gain just to break even. That is the amplified version of the same math. This is why every financial advisor will tell you TQQQ is dangerous for long-term holding. Because in a volatile market, even if the index ends up where it started, TQQQ can end up significantly lower. And yet, in a market that trends strongly upward, the same math works in reverse. TQQQ can capture enormous gains that a regular ETF like VOO simply cannot match. That is the experiment we're holding. In a trending market, TQQQ could win massively. In a choppy or declining market, it could lose massively. We are 4 weeks into finding out which type of market we are in. I want to end this section with something honest. Watching TQQQ drop nearly 5% this week while VOO barely moved is uncomfortable. Even for me. Even these are small amounts, then the purpose of this experiment is not just track numbers. It is to document what it actually feels like to hold a 3 times leveraged ETF through real market conditions. So week 4 and it already feels like a roller coaster and the experiment is just getting started. So to repeat and to close after 4 weeks, here is where we stand. Portfolio A, the boring one, VOO, the value is 68.52 euros, which is minus 0.44%. Portfolio B, the amplified one with TQQQ, has a value of 65.45 euros, which is a decline of minus 4.92%. Which means today the current leader is VOO, which leads by 3.07 euros. VOO is ahead, but we have 3 years of this experiment left, maybe even longer. So next week I will explain exactly how TQQQ resets every day and what that means for your long-term returns. Please subscribe so you do not miss my next update. The referral link for Robinhood Europe is in the description, and to be fully honest and open, this is a referral link. If you open an account, I get something and you get something. So, like every week, may the best ETF win. Now, you know I like to close with one question before I go. Last week TQQQ lost 11 times more than VOO this week. How much volatility would you personally be able to handle before you stop buying? 10% down? 20? More? Tell me in the comments. I read every single one of them.